Hey everyone, this video is going to be about specifically the Judas model for the New York session from 9:30 to New York close. Now, there's going to be an introduction as to what the time interval is, as well as the root candle that must be focused upon. And then I will show you a few scenarios of what to expect and what to look out for, and how to use that in combination with the higher time frame. Judas New York session takes place between 9:55 to 10:20, as stated in the Digital Time Theory book. The root candle of focus is going to be the 9:53. So it is a random candle to most, but as we know, it is a large liquidity pool that price gets dragged to many times throughout the week. The inner intervals for this Judas cycle is 10:02, 10:07, and 10:12. At any one of these intervals, we can expect a reversal to occur based off a higher time frame PD array. Now, at this point, this is a perfect example right here of how price leaves that 953 after a large expansion during London, Big Ben, right? The Big Ben time model, hits a 15-minute PD array, and at that point, we can possibly look for longs. Now, this is a clear example of how price during Judas, when it should have continued at 1020, it should have continued towards buy side. If you were in a long down here, then that's great, but you should have seen continuation immediately at 1020. At that point, once it starts pushing back down, you need to do two of two things. Look for what type of liquidity it's forming here. It's forming buy side. And anticipate a move at 1034 for a reversal. So this Judas was short-lived. What should have been a continuation instead dragged into the next model, which at 1034 began to push up to what? The 953 root candle. Here's another example of that. 953 was left up here. Small SIBI inversion, and we'll go through a few live chart examples as well in this lecture. But you're supposed to be waiting for a long entry, in this case because we're in discount, and be observing 15-minute PD arrays. At this point, this SIBI gets inversed. You can long with a stop below this low. Take profit if you're in multiple contracts, if you're in micros. Should be at 953. Thereafter, you can use standard deviation targets for -2, -2.5, etc., etc. But at 953, you need to be at least taking one con off and adjusting your stop to break even after this large move like this. What do you need to be looking out for? Two things. At 1020, like the previous slide, you need to be anticipating a continuation of this move. And you need to be observing the opening price of these root candles. The opening price, so this down close candle, the opening price is up here, the body right here. The indicator automatically marks that for you, but observe the opening price. Price, in this case, needs to close with a body close, not a wick, above that opening price for continuation. It makes it high probability thereafter that you'll see continuation. Okay? Here's a scenario where that Judas run begins at 955. 953 gets tagged here to the tick, this low here. 955, it tags it. It also starts pushing to what? The engineered buy side that was left around New York Open. At that point, price is pushing up, and you must be adjusting. If you're in longs, you must be adjusting your position accordingly, because guess what? At 1020, you were to expect continuation towards buy side, right? Well, guess what happens? At 1020, instead you see chop, and at 1034, you see distribution down to what? The 953 yet again, ticks right to it, closes below. And it is a perfect example if you're in short, based off this root candle, 953, you're going to want to see it close below it for continuation. You get a little move like this, maybe a quick short-lived move and a quick short trade right there, but this is what you want to see. Like this example, you want to see a body close above the 953. See how it closed below the 953, and guess what happened? It continued to push down. This is my favorite type of setup for Judas. It is one of the easiest to trade. And a couple things here. I still fall prey to this, but just because an engineer's buy side does not mean it's always going to push up and take out all that buy side that was created. You need two things. You need a higher time frame, 15-minute PD array. If you don't have that, it makes it less likely that this buy side will get taken out. And instead, it's going to look more like a sell side curve and just keep generating buy side and going down and down and down, right? So you need to have a 15-minute PD array. You can still try it without it, but it just makes it high probability. And then when you have an SMT, it makes it even more high probability. Now, what can we expect? At 1012 or 1020, we need to see that move up to take out that buy side. Right here. Goes below 953. Lets you get tagged in. Stop below this previous low down here. And it starts to push up to a potential terminus of the next time model interval, model 11, between 1020 to 1110. At this inner interval here, past 1034, it is now in premium. So this is a different model, but I just want to say this as an example for Judas. Best scenarios for Judas are going to be 1110, 1149, and 1235. Very, very rarely does it occur where you see this type of Judas setup and it just has a trend day thereafter. So you must be observing the higher time frame as well and weekly session time models to distinguish if that might occur. But if you're in long, you're trying to reap in profits essentially. You're trying to keep stops tight. You could be wrong multiple times throughout the day, and I'm sure some of you have seen that during live sessions where I get stopped out multiple times. But all I need is one or two trades to go in my favor, and I maximize those, and I'm still green on the day. That's all you need to do. So occasionally you will get stopped out trying to trade this type of setup. But zoom out, go to the 3-minute, 6-minute, 5-minute time frames, and you can capture most of the move in that manner. Same type of setup here, creates low resistance buy side before Judas is over. Judas is still using that time slot to create that buy side. What does it do? Exactly at 1020, it starts to take all that buy side out, gives you a chance to go long beneath the 953. You do not want to long above the 953 candle or root candles in general. If you're trying to long, for example, you don't want to long up here. You want to long this root candle, for example, if you're trying to capture that trend, you're going to want to long below that root candle. Same thing here, 953. You can still long here and try to capture the move, but it makes it higher risk. If you long here and wait for some inversion or an order block to be touched, this order block here, and you long that, you can get a better entry with lower risk involved. Here is a perfect example of a move occurring at 1007. Inner interval of Judas goes beneath 953. And just as we talked about in the previous slides, you're going to want to see a body close above the 953, right? In this example, it did not. But what did it do in this next example? It closed above the 953 right here. And what did you see? It ticked to it one more time, and it started to push up all the way until that potential terminus of 1034 or 1110. Now that is the case, I'm going to show you a few live examples on the actual charts, and we'll go a bit more in depth. Now this is an example on NQ. We have the intervals placed. 955 to 1020 is your Judas. You're to expect the move to begin at 1002, 1007, or 1012. In this case, 1002, you can see that displacement towards this engineered buy side. A couple things to note here. Observe the 953 as it gives you an opportunity to long based off the opening price. There's that root candle. It's used throughout the session. This root candle is the daily session root candle for New York, 953. You can see how price uses that throughout the rest of the day. Needless to say, a couple things to note here. If you are long based off perhaps the 953 in general, maybe you're using this BISI here to long, that's great. But observe two things: time and potential resistance towards price. So observe higher time frame PD arrays, such as 15-minute SIBIs, BISIs. And here with electronic trading hours on for futures, we can see what it's bumping its head on. After that large downside move towards sell side during London, it created an inefficiency here, 15-minute SIBI. We go back to that Judas. We're now observing that PD array at that specific time. And if you longed here based off the buy side, you would notice that it takes out this buy side level, and there's a little bit of a buy side low resistance area here. So we can see a move all the way up there. But if you're in a long position from down here, that's amazing. But take profit should be at -1. And this 15-minute SIBI. Now, when you're at that point, you need to be watching the 15-minute time frame because you want to see a body close above the CE of that SIBI. In that case, you can potentially see a inverse SIBI, and you'll see continuation towards buy side. But notice on the 15-minute time frame, that candle instead wicked, and what does it look like on the 1 minute? Pushed down, respected that CE here on the 1 minute. And what is occurring here with time? As I mentioned, you are to observe two things: time and price. But what is occurring here with time? It is 10:20. It is approaching 10:20. You're going to want to see a move back up at 10:20. If you don't see that, and instead you start to see down close candles like these right here, this one right here, you're likely to see continuation back down to what? The 953 root candle. Okay, so this is an example of engineered buy side beginning right around 955, 1002, and it could not push back above that inversion, or excuse me, that SIBI, the 15-minute SIBI, and it ran out of time at 1020. Now here's an example on Disney, okay? You saw a little bit of a gap down. Price in the higher time frame is bearish. It has been pushing down consistently. Now what occurs here at New York Open, 930, starts to chop a little bit, right? We take that Judas interval, 955 to 1020, and we see this engineer liquidity on both sides. So what must we do? We must adhere again to the 15-minute time frame, and then we can then observe this 15-minute imbalance, the volume imbalance right here. We drag that over, and we do not want to see a body on the 15-minute close above it. Instead, we want to see wicks if we're trying to short. If we're looking for long opportunities based off that, then we're looking for a 15-minute body close above it. So you can see how price is using that and gravitating towards it, but it is also using the 953. Wicks to it perfectly right here. Price then gives you what? An opportunity to short. As mentioned, 15-minute time frame. There's wicks above that volume imbalance. And what times are you watching for the inner intervals? 10:02, 10:07, and 10:12. What happens at 10:07? Random reversal. Back down to sell side, the engineered sell side here. Now at this point, what do? Use a standard deviation for a price target. You're not going to use the entire candle here to look for a price target. You can, and you'll get -1 hit. But to make it a bit more accurate, just take that high, these two candles right here, and use the -4. Close below the -2.5. So you can see continuation to what? A -4. Okay? But this is a case of Judas where you see engineer liquidity on both sides. So pay attention to the 15-minute time frame. Pay attention to the wicks, the bodies. They tell the story. Wicks do the damage. Bodies tell the story. There was no body close above that volume balance. So what can we expect? Continuation down. Use the 3-minute as well. And you can see another possible entry if there is an inefficiency. That will always be the case, but in this example here, there is a little bit of a 3-minute BISI, closes below. You can take a stab at a short there if you're an option trader. And your stop would be above that inversion or perhaps this order block up here. Here's a nice example of the opposite idea. So there's engineered sell side now on Tesla. So we'll mark that Judas interval. We'll mark the 953 candle, opening price. Now, what do we have here? We have price going into discount of the 953. Price then pushes exactly at 1002 towards buy side, but you still have all this engineered sell side now. So adhere to the 15-minute time frame. There's a 15-minute CB up here. And if you want to see continuation and you're in longs, then you're going to want to see continuation past 1020. But as it approaches 1020, what does it start doing? It starts to distribute back down to what? The 953 candle. So this is an example of engineered sell side. You can take a very quick short based off this move here. Use a breaker or a CB, or you can use a BISI inversion. And take profit should be, again, at 953, and then after that, standard deviation off the 3-minute order block up here. 1, 2, 3. -4 gets hit. Expect a possible reversal. Here's a more violent example of Tesla. The day before, 955, 1020, 953, opening price. There's your root candle. Mark the inner intervals. 1002 starts to displace up. 1007, there's your manipulation. Right there. Your manipulation candle. 1012, you're going to want to see continuation towards sell side. Why? You have high resistance liquidity formed here. You have price starting to disrespect bullish PD arrays. One was disrespected right here, the second, and the third, all BISIs. And at that point, you're going to be utilizing time for continuation. Time will tell you at 1020 if it wants to continue. So again, we're using 953, but because 953 is very close by, we're not going to be taking profit there. Instead, we're going to be using standard deviation targets. Once it hits -2, take profit. You don't want to see it close below -2.5, closes below, take profit at -4 next. And that's all you need. Now, what happens thereafter? If Judas occurs in most cases, so I'm going to have to redraw that, 955 to 1020. When is the terminus? When is the endpoint in best case scenarios? 1110, 1149, 1235, You can see how price stalled out at 1235 thereafter, and it was just time distortion. Why is that the case? Well, you again must be observing the 15-minute chart and or 1 hour chart, and looking to see if there is any 15-minute PD arrays there. If you were to observe the 15-minute, then you can see this very small 15-minute BISI, and price does not hit it until right around 1235. Taps into it before, but after it does that, there's no 15-minute, again, there's no 15-minute body close beneath that BISI, so it's not an inversion, and instead price is respecting the CE of that and is not closing below it on the 15-minute time frame. Now, Judas can extend in best case scenarios. This is a best case scenario for Judas. You get a sharp move like this, taps into a 15-minute PD array, beautiful inversion, and keeps trailing all the way down until 1235. Why? Because there's no 15-minute PD array. There's no inefficiency. Instead, price seeks to reprice off this range, the low to the high, to that specific inefficiency, that specific BISI, because that is the only inefficiency throughout the range. Once it taps into that and time and price meet at 1235, you should not be looking for shorts. Okay? You should not be looking for shorts at that point, especially after this large move. Instead, what can you expect after? Because Model 11, Model 110 was used for continuation of Judas. What can you expect in this scenario? You can expect Model 111 to occur, an end of day move to take out any low resistance liquidity. Where is the low resistance liquidity? Right there. What happens? End of day, you see a random push up. So these models, they intertwine with each other. And you can, once you begin to master them, and we'll talk about it more and more later on throughout the videos, you can see how they intertwine with each other and how there's a pattern of these time models, right? So let's do a couple more examples for Judas. And I'll show you some very clear-cut buy-side examples. This is another sell-side, engineered sell-side Judas, where it pushed down to what? 1149. Why did it stop at 1149? Again, because there's a 15-minute PD array here. That is met. At that point, it was model what? Model 110, which we talked about in a later video. These are examples of violent Judas swings. So now, instead of, this is the example we just talked about. When did it end? Around 1235 to 1409. But instead, now it's towards the buy side. So here's a pretty clear-cut example of what a perfect bread and butter can be for Judas. We mark that interval. This is one of the easiest trades to make when it comes to Judas. Forms engineered liquidity. What are we paying attention to? The 953 opening price. It's your root candle. Goes into discount of that. This is where you're going to want to long. Observe, again, the 15-minute time frame. Makes it higher probability if there is a 15-minute PD array there. In this case, there is. There is an inversion right here that we must pay attention to. Price is using that inversion. Go back to the 1 minute. That's the PD array that we're going to be using for the 15-minute time frame. And when we include time in this low resistance liquidity forms right here, what time do we expect a move to occur? 10:02, 10:07, 10:12. 10:12, you see that reversal. At this point, you need to be managing your trade. Needs to hold this bullish PD array, this BISI right here, if you want to see continuation. And then price expands and takes out all that engineered buy side. At that point, what do? We use the 3-candle order block system for the standard deviation. That high to low, negative 2.5, negative 3.5, etc., etc. So this can very easily be your bread and butter for Judas. And it makes it, again, even more high probability if there is a 50-minute PD array. And you're going to want to get in at the discount of the 953 candle. You can wait a bit longer, but it's best to get in at that low and not be afraid. How do you know when to get in? Observe the 15 and 5-minute time frames as well. The candles tell you everything you need to know. Do you see how this candle wicked towards that 50-minute PD array? What did this candle then do? Engulf the wick of this candle and closed above 50% of the previous candle before that one. So at that point, price should not go beneath this order block. Same thing on the 15-minute. The opening price of this candle is up here, right? You're going to want to see price close above that opening price. Think of it as daily bias. Once it closes above that, it tells you it's going to want to see continuation on the next candle. Understood? We'll go through a couple more examples of Judas. Here is ZOM, the stock ZOM, 955, 1020, 953, opening price up here. That's your daily root candle for the session, as well as for Judas. Engineer, sell side. Look for a 50-minute PD array. You're going to want to see bullish PD arrays be disrespected. 10:02, 10:07, 10:12 inner intervals. And you're going to want to see continuation down at 10:20. In this case, it pushed up slightly thereafter. Why? Because, again, you must be observing the 50-minute time frame. What is happening here? What PD array must we be observing? There is an order block here, bearish order block, but I will personally be observing this BISI inversion for an entry. Price then taps into that PD array, and we have many things occurring in confluence with each other. We have engineered sell side. We have a tap into that 15-minute PD array, which is a bearish PD array. And we have time telling us that slightly thereafter, before 10:34, we need to see a move down and continuation thereafter. Now, when you use these fib levels, the circle of 9 fib levels on PD arrays like this, you don't want to see it close above the 56.25 in this case. If it does, you're going to see continuation. But because it is respecting this level, and if it respects that level, then that is all you need to observe. Now, when it comes to the actual candles, again, observe the 15-minute time frame. Large displacement move. Within 15 minutes, the move begins and is almost over. But if price begins to go beneath the 50% area with the body of this candle, then it tells you the draw. You must also keep in mind other time frames. So the 5 minute, it's the same concept as we talked about. Wicked to that PD array. This next candle closed beneath the entire body of this candle. What can you expect in the next few candles? And there's a whole other aspect to this. Those that have made it far into the video, we'll talk about this later on, but when you see these candles close and disrespect each other off PD arrays, you begin to candle count. So how many candles is this? Right? How many off this high before it starts to push back up? But when it comes to that Judas, you're to expect a move towards that engineered sell side right here. Hence the PD array, high probable trade. Here's another example of engineered buy side for Judas from 955, 1020 is the allotted interval. After that, see how price proceeds further and further into the next time model. 1034 is the next interval for that time model. But at times you see how there's engineered liquidity during Judas, and what should have been the move at 1020 begins to stall out. In this case, this is what makes model 11 occur at 1034. This is a different time model, but when you see engineered liquidity, and especially buy side or sell side, low resistance, it makes it a high probable trade, low risk to go long or short based off that liquidity formed in Judas. And we are still to pay attention to the 953 opening price, just down there. You see how it goes into discount of that. And then what happens on the 15 minute, as we talked about, down close candle. What does the next candle do? Close back above and engulfs the entire body. What does that tell you for the next few candles? That is going to push up. That the bias is going to be towards buy side at that point. Now, for futures, if you see a large move during Big Ben, the time model for London, Big Ben time model, at that time, you're likely to see chop throughout Judas. I'll show you an example. So here's an example of a large downside move, 8:30 news, Big Ben, push down to a 50-minute PD array. Judas, 955 to 1020. What does it start doing at 955? It begins to chop. We must then observe the 953 opening price up here. And we are then looking for a possible long at a specific time. Either we use the 1020 or we wait until 1034, the next time model. Why? Because we had such a large expansive move during Big Ben. And at 1034, what are we to expect? A push up, take out this engineered buy side to what? The 953 candle. If you are looking for continuations in the trend, I'll show you an example for the weekly session models. Then you can use Judas to do so. Here for Roblox, we have his carryout model, Aries, push down, take out that Judas weekly session sell side. We then have Ash Wednesday and Icarus. It is on top of this liquidity void. That is the PD array that is observing and is filling that liquidity void, right? That new day opening gap. Now, you're expecting, based off the weekly session time models, continuation towards what? The low resistance liquidity. So buy side in this case, right? So you're observing the weekly session root candle. That's the Ash Wednesday root candle. Now, this right here is a separate day, 9:30 New York, to close, right? But when you go to the 1 minute time frame for your daily Judas, you're going to want to see continuation towards this move, towards buy side. So in this case, it was model 110. Price went all the way down to the specific time, and if later on you can come back to this video and see what I'm talking about with model 110, or if you read the book, you already know the times. And then we go to the next day. This is the example I want to portray. So we still have this liquidity up here, and perhaps this new day opening gap way up here, which price does reach. But at open for Friday, February 12th, what is this price action here? What is it doing? From 955, so that's New York open, I'm just going to mark that, to 1020. At this specific time, what is Judas doing? It is engineering buy side. What is it doing? It's sitting on a 15-minute PD array. And what can you expect at 1020 or 1034? A push to take all this buy side out. And you're using that in confluence with the weekly time session models because you're expecting a push up, market maker buy model. You're now getting more granular and micro, and you're using the Judas time frame to enter long based off a weekly session time model narrative. You then get that move all the way until market close for that example. So in this video, we went over several aspects. We went over the time interval for Judas, the root candle we need to observe, 953, the inner intervals of Judas, and how to expect possible times of reversal. We then also went a few examples as to what to expect with 953 and how to expect continuation with time and price of 953. Reversals at 1020, and you're going to want to see continuations at 1020. The low resistance buy side, easy setup, bread and butter setup for Judas. This is fractal. It happens on the weekly session models too for Iscariot model. Another example here. And we went over how you want to see if price wants to continue a body close above the 953. We then also went over the confluence of the weekly session time model with Judas and how to use that for trend continuation on the weekly time session models. And we also went over the potential terminus endpoints throughout the session for Judas. Best case scenario, like Tesla, 1235, hit that 15-minute BISI, or I think it was an inversion, whatever it may be. It hit that at that exact time, and that was that. After that, time distortion. Short-lived moves like this, for this example, 1034, 1110, price then experiences model 11 thereafter. I hope this video was insightful. I hope this video clarified a few aspects and showed a few examples of Judas specifically. Until next time.